Good evening. Today I want to explain to us a financial term known as financial freedom. Financial freedom. The question is, are you financially free? Let me quickly show you how to calculate your financial freedom. Let's say every month your standard of living, you spend your standard of living, you spend 1 million naira every month for your standard of living, and you're earning the amount of money you earn every month is 1.5 million naira, and meaning that your savings every month is 500,000 naira. And what you have in your account as your savings, your reserve, what you have as your reserve is 5 million naira. That's all you have in your account. This is how to know that you are financially free. Let's say, I don't wish you that. Let's say this your earning, your income, it's a job, maybe it's a salary you earn every month, and for one reason or the other that income is not coming. It simply means that you are going to fall on your reserve, which is what? 5 million. The question is this: if you stop getting this 1.5 million naira every month, meaning that you have to fall on your reserve of 5 million, remember your standard of living is 1 million, how long are you going to survive living on this standard of 1 million? It's simple. So this is the formula. Your financial freedom equals to your cash reserve divided by your standard cost of living. Let me shorten it. Now, what is your cash reserve? Your cash reserve is 5 million naira. Your standard cost of living is what? 1 million naira, because that is what you spend every month. 5 divided by 1 will give us what? 5. And since this 1 million naira is every month, that means you have just 5 months. I hope you understand. So let's use another example. Let's say person B earns 500k every month, and his costs, standard cost of living is 100k every month, and he has 5 million reserved in his accounts. Now, standard cost of living every month means his savings every month is going to be 400k. And this company decides to, okay, we don't want again. The standard of cost of living is 100 million. Remember, it's 100,000 naira standard cost of living every month. His reserve is 5 million. The question is this: if he stops earning this money, how long, and he falls on this 5 million, how long can this 5 million maintain his standard cost of living? Let's do the calculation. Financial freedom equals cash reserve divided by what? Standard cost of living. His cash reserve is 5 million naira. 5 with 6 zeros. His standard cost of living is 100,000 naira. 3 zeros cancel 3 zeros. 2 zeros cancel 2 zeros equals what? 50 months, which is 4 years and 2 months. So which means this person can afford to fall on his cash reserve, and this cash reserve will finance still his standard of living, cost of living for 4 years and 2 months. So a lot of persons feel that they are earning a lot of money, therefore they feel they are financially free. No. Don't confuse it. Your financial freedom is if that money stop coming, how long can you continue to maintain that standard of living? Let's say you used to eat 1 lap of chicken every day and 2 packs of yogurt. Can you continue that, and for how many months? What determines your financial freedom is your cash reserve. Is your cash reserve and your cost of living on a daily basis. Now the question is this: how can I increase my cash reserve? There are 2 ways of increasing your cash reserve. Let me quickly go into that. How can I increase my cash reserve? Now, there are 2 things that will help that increases your cash reserve. One is your income. Look at this person, your earning is 1.5 million. This other person's earning is 500,000 naira monthly. If you increase your income, it will be your cash reserve will increase faster. Increase your income. Increase your income. Now the question is, how do I increase my income? There are 2 ways of increasing your income. One is by learning a new skill. You can learn a new skill, a high income skill, and deploy that skill so that when you are earning money from your salary, you are also earning money from your skill. That is one way to increase your income. Let's say you are earning 1.5 million from your salary. You are earning 1.5 million from your salary. And then you now have a skill, and that skill is generating 1 million naira for you, which means your total income every month is now 2.5 million naira. So which means if you are saving 1 million naira before, plus this 1 million which you get from your skill, which means your savings every month will now be 2 million naira. Which means in a year you can afford to save up to like 24 million naira in 1 year. 24 million naira in 1 year. That is one way of increasing your income. A second way of increasing your income is by reducing your expenditure. Because this person that is earning 2.5 million naira, whose expense every year is about, say, this person is earning 2.5 million, savings is 2 million. That's because the person is spending 500,000. Because if you are spending 1 million, this is going to be 1.5 million. That's a correction here. Now, assuming this person that is earning 2.5 million naira from both skill and then salary decides that his expenses is going to be let's say, for instance, 100,000 naira. His expense is 100,000 naira, and it targets 5 years. 5 years time, remember that means his savings for every month is going to be 2.4 million. 2.4 million every month times 12 months. 2.4 million times 12 months. Let's do the calculation. 2.4, that's 2,400,000 times 12. That is 28 million. 28.8 million times 5 years. That will give us 144 million naira in 5 years. Do you know that in 5 years now, this person can decide in 5 years that he wants to increase his standard of living to maybe 400,000 naira. He can decide he wants to increase standard of living to 400,000 naira every month. If you divide 144 million by 400,000 naira, that will give him 360 months. And you know we have 12 months in a year. That will be 360 months. 360 months divided by 12. That will give us 30 years. So, which means after accumulating this for 5 years and he decides to increase his cost of living to 400 years, even if he doesn't work, he remains financially free for 30 years. So you can see another way to increase your financial freedom, apart from increasing your skill. Getting a skill is not just the only way to increase financial freedom. You can also do it by taking from that your savings and starting a business. That business can also give you an income which will add to your salary to increase your income. Now, increasing your income is not the only thing. If you reduce, you need to be disciplined with your expenditure. Reduce your expenditure so that your savings can increase. When your savings increase, your cash reserve increases. And when your cash reserve increases, your financial freedom becomes longer. So the aim is to target a cash reserve such that any day you stop working, that cash reserve can take care of you for the next 50 to 60 to 70 years. I hope you now understand the meaning of financial freedom. Financial freedom equals to, look at the formula here, financial freedom equals your cash reserve divided by your standard cost of living. So you know yourself, how much do you earn every month? How much do you save? How much is inside your account? That your cash reserve, divide it by the amount of money you spend every month. Whatever you get is the number of months you can survive on that cash reserve if your income stops coming in. This is financial freedom. If you want any advice on how to manage your accounts, your investment analysis, feel free to chat me up and I'll be willing to do what? Give you the requisite ideas by God's grace. My name is Amota Chukwudi. I am a financial analyst and expert by God's grace. Thank you and have a wonderful day.